Hey everybody, Jake and Gino here, and today we're going to do a little Q&A with J and G. We get questions all the time from different people in our community asking about multifamily, asking where to find deals. And so we're gonna start putting them out there on YouTube, answering the questions so everyone out there can basically, hear the answers because I'm sure if one person's asking, there's probably 10 people asking. They're just not, willing to step up and raise their hands. So Mr. G Daddy Papa Funk, G Master, how we doing?
I'm doing good. A lot of adjectives there, huh?
Yeah, whatever an adjective is. But yeah, man, so everything's great. Hey, and I actually referenced this in the intro a little bit. So Dan S says he's having a hard time finding the deals. He doesn't know where to find them. What do you think? Where are you finding deals? Are you finding deals right now?
Well, we're finding deals, just deals that really don't make sense, right? I mean,
Those are the deals.
that's what it comes down to. And I mean, listen, our education is based upon buy right, manage right, and finance right. So if you can't buy right, you just can't buy. Big guys like Ken McElroy owns thousands and thousands of units, one of the rich dad advisors. He's just not buying right now. It doesn't make sense for him to buy. He's got a sizable portfolio. But those guys like me and you and our students, we want to buy. So where are you looking? First thing you need to do is really choose a market. And I mean, there's certain markets you can't really touch right now. I mean, they've just emerged, and you see where they are. I was speaking to a student yesterday. He's in the New Orleans area. He's in Louisiana. He described his market as being more linear, Jake. It's not really that up and down bell-shaped curve. Like the markets in the Midwest, you're talking about Ohio, you're talking about, Kansas, those kind of markets where they're more linear, looking more for cash flow. So I think those are the markets where you're going to stay, because when the market does take a significant downturn, which sooner or later it has to, because we're like, year number 8 or 9 into this cycle, and that's when, on average, it starts taking that hit. Those linear markets are going to get less impacted. So if you can buy right in those linear markets, pay down your principal, cash flow, and get a nice cap rate, I think that's where you should be looking. Let's name a couple, Jake. Look in the New Orleans area. Look in the Kansas City area. We had a student looking in Topeka, Kansas. I mean, these kind of markets, certain markets in Ohio, maybe Dayton, Columbus, Cincinnati, these markets that are cash flowing nicely. There's no job growth there, but listen, you're not going to get hammered once the market takes a downturn. And if your strategy is to cash flow and to get out of the rat race, those are pretty good markets to get into right now.
I'm going to take a different angle on this because if you're hungry and you're saying, man, I want to get in the game or I want to buy another deal, I think this is the time to morph a little bit and become that salesman. Basically, we've relied heavily on broker relationships, and unfortunately, the cap rates are getting compressed, and the deals that were there 2 years ago aren't there anymore. They're not there. They're not as abundant as they were 2 years ago. Let me say that at least. So if you are really hungry, you want to get out there, you got to become the salesperson. I've actually started building out a database, and I'm actually extending it, creating like a little customer relationship management, and I'm going to start pounding the phone because realistically, if I want to get a deal, I got to go out there and get it. So if I know who the customers are, right, basically who are the owners of these properties that I want to buy, I map it out, how many units, who's the owner, what's the contact information. Look, it's up to me at that point to go get it. And then if I can cut a broker out of the situation, that makes it even sweeter for the sales, the person, the property owner to sell it because they're not paying a broker's commission. They're selling directly to me. So that's something I'm working on right now. And I always say this: if you're going out there trying to buy multifamily property, you got to get your head on correctly because you are the salesperson. You're selling that person, that broker or that owner, on why they should be selling you the property. You're trying to buy it, but because a lot of people think, okay, these brokers or real estate agents, they're trying to sell me on why I should buy it. That's not what this game is. You got to go out there and sell them on why you're a closer, why you're going to get it done, why you're the guy, and that's the environment that we're in right now.
I think part of the difference to what Jake and I are talking about, 4 or 5 years ago, cap rates were 8, 9, 10. Cash on cash return was 15% plus on a lot of these deals. The problem is that you're looking at it now, you're going back to revisionist history. So there's still deals now. They're not like they were 3 or 4 or 5 years ago, where everyone calls it
not as abundant.
The low-hanging fruit, right, Jake? That's what they called it. But there was risk back then, too, because rents were a lot lower back then. The economy wasn't as strong as it is now. So, I mean, there's like trade-offs, right? So, part of the problem now is there's, hot markets. Like, let's say we're looking in Chattanooga right now. It's a hot market right now. A lot of demand in that market. It pushes up pricing. So, you've got to really be out there hunting the deals. We have a product that create a credibility book. Get your credibility book done. Let people know what you're buying. Let people know what your business plan is. You have to stand out. ahead of your competition. When you start building your team out, your team is really going to help you. Whether it's a banker, whether it's a mortgage broker, whether it's a real estate investor, they all have to know your strategy, and they have to know that, hey, if the banker's got a deal in his portfolio that is crapping out, he's going to come to you with that deal because he knows what you're looking for. We're looking for mom and pops, so you have to convey what you're looking for in a deal also.
This next question dovetails perfectly with this. JT, I'm worried about timing the market and buying at the top. What do you got to say about that one, G-Dad?
I mean, that's like the fear, right? There's four market cycles. Let's do the 4 market cycles real quick, if I remember them, okay? First one is recession. Second one is recovery. Third one is expansion. And fourth one is a hypersupply. Those are the 4 markets. I guess you go buyer's market, seller's market. But, the recession was back in 08, 09, 2010. Lasted a long time. After that, things start recovering, which is great. That's when you want to start buying. When you're buying in the recession, if you're Sam Zell and you have all the capital and you have all the cojones, as Jake likes to say, that's when you're buying. People are fearful. Everyone's running for the exits. It's really hard to buy during that time. Very risky because no one's lending money on these deals. The occupancy on these properties are low. Nobody's cash flowing. If you can hold these deals and buy them at 30 cents on the dollar, you're going to make a ton of money. You're going to become really wealthy. But it takes a lot of courage. It takes capital because a lot of these things aren't being financed, and it takes a lot of foresight, right? So people start buying in the recovery phase, which is going on right now. A lot of the markets are transitioning. Not one market, not the whole entire U.S. is in one phase of this. Every single city is in a different phase of these 4 phases. So the recovery is the second one. Things start recovering. Things start looking a little bit better. It's a little bit, on the horizon. You see it growing a little bit. The third one is the expansion phase. A lot of markets are in this expansion phase right now where things are starting to compress. They're not really heating up right now. Demand for multifamily building is going on. So a lot of the markets are between this expansion and fourth, which is hypersupply, which means there's more markets being put on the market than they're being absorbed by the market. And that's a little risky right now because what's going to happen? Like in Cleveland, Ohio, 2,000 units are going downtown. Last year the broker was telling me. The problem with that is there's no job growth in Cleveland. At least in Atlanta, if there's a hypersupply, or Las Vegas, or parts of Florida, if there's hypersupply going on where they're putting on a ton of units, at least there's job growth to take those units. So that's pretty key right now. You just have to look at the absorption levels and see what's going on. We tend to stay away from those high-end units, so it doesn't affect us as much, but it will sooner or later because when they don't get absorbed, they're going to start doing concessions and start cutting prices. And then all of a sudden, as A properties are giving away stuff, they're going to start going down to the B properties and going to start affecting the B properties. So just be careful at what phase of your market is. And we all don't want to buy at the high end of the market, right? But Jake helped me out writing this article. And he said, you know what? You got to keep looking. You have to stay focused and you have to know what you want, right? And if it pencils out, as Jake said, go for the deal. Don't make an excuse. If you don't look and you say it's the top end of the market, you know what? You're never going to find a deal. It's never going to be out there. So focus on what you're looking for. Create those buyer criteria really strong. That's why we haven't bought a deal in a year because there are no 8 caps. So I'm not going to buy a 5 cap. And what the problem is? These brokers are telling you, and they're at 10 cap. We had a deal last week where a broker actually said, he said Jake is laughing because it's to me it's bordering on negligence, right? He said it was an actual 10 cap, 96% occupied. In reality, it's a 5.7 cap and it's probably 82% occupied when you look at the numbers, right? And it's a little frustrating because it's like, come on, man. So we dropped the price to where it was. The only problem is he has so many calls going on this deal that's what's going on with the market. So you just can't overpay in this environment. Maybe if you have some assets, maybe it might be time to start liquidating something, taking something off the table and putting that into cash. That might be one of your options this time. So when the market does take a dip, you have some cash reserves. We're still looking. We're looking every single day. We're trying to source deals every single day. I think that's the key. Don't get frustrated because it's not going to help anything. You just got to take a little bit longer to look, but just keep looking for those deals.
When in doubt, check your premises and always return to the framework. Buy right, manage right, finance right. If a deal works and you know you're buying right, you're hitting your parameters, buy the deal. You just keep looking until you find the deal. That's the thing. You're out there hunting every day, looking for the deal. Don't worry about, know the market, but don't worry about the market. Rely on your principles. Rely on the framework. If you're hitting the cap rate you want, if you're hitting the cash on cash return you want, if you're in a market that you like, go for it. That's my take on it, and it's finding the deal right now. If you got to look in different places, you got to start cold calling yourself. You got to maybe try to find something that's in foreclosure, whatever it is. You just got to find the deal. And I think that's what it boils down to.
You know, Jake, one of the things that I think has been a blessing in disguise for us, we scaled up so quickly. We had 650 units in 3 years. And this last year we've hit the pause button, not because of our own, we wanted to, but it was able for us to really shore up our management systems and really take control of our business, right? And maybe that's what you guys should be doing for the next 6 months to a year. If you have 10 or 12 units or you have 50 units or whatever, slow down. We've worked with a lot of students who are really scattered around. They don't have a business plan. They don't have the proper entities. They don't have proper team members, whether it's accountants or lawyers. Maybe now's the time to say, listen, if there's no deals out there, let me work in the business and on the business and make sure my system's up. And for us, it's been a blessing in disguise. We've been able to create so much more content for Jake and Gino, but a lot of content we created, we're using it for our own business. We've learned stuff like lease lock, Jake. We've learned CrowdStreet. We've learned about, cell phone towers.
Check out that lease lock podcast too. I think that podcast has a lot of value in it.
Right. We've learned about self-directed IRAs. We've learned about raising capital. So now is the time that if you can't find the deals, there's no deals out there, use this time to educate yourself even more, to learn maybe another strategy, to network with other people, and to also shore up your management systems. And if you're not managing the property, really learn systems of management so you can implement them with the management company that you're hiring. So this might be a blessing in disguise. For us, we've really been able to take control of our management company, really been able to grow it, and really been able to teach about it. And it's really been a really great year for us.
Last one from Daniel J. How do I have the right answers for brokers and overcome inexperience?
A is hit me up. I have a great ebook, Researching the Market ebook. There's 46 questions you need to ask a broker. Obviously, you're not going to ask all 46 questions on the first call, but listen, you have to speak the lingo. You have to know how to talk like a multifamily investor, because if you don't, and Rich Dad Robert Kiyosaki always talks about it, you have to learn the jargon, and you have to have that specialized knowledge like Napoleon Hill talks about. And you know what? If you need to spend money on it, that's what you need to do, because that's what I did. When we bought our first deal, we really didn't have a lot of credibility because I only had a couple of small assets. But I knew what a cap rate was. I knew how to negotiate with a bank, even though we got crappy terms. I still knew how to do all that stuff. And you fumble and mumble, but let me tell you something. Go out and find a mentor. Go out and pay somebody to help you out. Go out and buy an educational program that'll teach you this stuff, because it's going to pay you 100 times over going forward. Because if you can shorten that learning curve and you can find out how to do it, we have a document that's coming out, the buying process, basically telling you how from the letter of intent all the way over to the buying of the property and taking it over, what steps you need to do. When you're a first-time investor, that might be a little overwhelming for you. You just really need to learn the lingo and learn how to ask these brokers these questions, because once you can qualify yourself as an investor, they're going to call you back. And also, you're qualifying the broker, because the broker doesn't know what it costs to run a property in his market at how much it costs per unit in expenses. You're talking to the wrong broker, right? If he doesn't know how much it costs per door to buy the property or how much in CapEx you need to put aside, you're talking to the wrong broker. So qualify the broker so you're not wasting time with him, and at the same time, he's going to be qualifying you.
I got a million answers for this. I mean, I'm going to stick to like 2 or 3. I'm going to steal a little bit out of the G Daddy's playbook too. So number one, just do it, right? How do you overcome experience? By taking action and doing. Start, and this is what we tell students. Go out there, find a deal that not so interested in, get the numbers on it, start networking with that broker for practice, right? Get your feet wet. You got to dive in at some point and get off the sidelines. Number 2, do what the G Daddy does. Listen more than you speak. You should not be answering the broker's questions. He should be answering your questions. Ask questions and then shut up, right? And listen and learn and be present and be an active listener. Don't be thinking about what you want to say next. Sit there, ask questions, shut up and listen. Absorb it. Try to understand what he's really saying, and then come back with something else down the road. Don't hammer these guys, right? But ultimately, you gotta dive into it. And I know there's a something like a Wheelbarrow Props Academy out there that has this whole section on how to speak the language. I don't know, just saying. So, G Daddy Papa Funk. Anything else today?
That's it. We're hoping to have these Q&As every week going forward on our YouTube channel. So you know what? Do us a favor, subscribe to the channel, leave us a comment down below, ask us questions on these YouTube videos, so that we'll prepare for the next week. Hit me up at jakeandgino.com. Ask me any question on there. I'll either write an article, we're posting an article next week on these questions, or I'll answer you personally, directly, or we'll make a video like this about the questions, because it's important. We need to learn your pain points, because we all have pain points. And Jake and I might think we know what you guys need out there, but it's always best to ask you guys and then create content that's based around those questions.
Awesome. And guess what, folks? He just committed right there. So watch out. Daniel J, same thing. Number 3, commit.
And Jake, one last plug. Everyone should be on Wheelbarrow Profits podcast. So go on the podcast on iTunes, leave us a review. It's a great podcast. Listen, we're doing so many downloads a month, and we've got some great guests coming on, and we've had great guests. So one last thing I'm going to leave you with. I just created an article on, it's basically a roadmap on how to get into your first multifamily deal. It's basically 30 podcasts, YouTube videos, and private calls that I've put in a sequential order that you can just listen to and download from the very beginning of why multifamily all the way to Finance Right and our podcast on Bigger Pockets. Everything in between is all about that process, all about that roadmap. It's awesome. It's about 30 hours worth of content. It's free. It's on our blog at Jake and Gino. In the buy right, boom, hit it, and I guarantee you guys will love that content.
One last thing too, because we were talking about deal flow, and I do think that there's more deals out there between the 20 and 100 units in terms of size than there are in larger stuff right now. Because I think more of the bigger guys, the big guys out there are looking at the 150 or less, 100, 150 even right now, trying to, just get some deals. So, but I still think there's more opportunity in the smaller stuff in that 20 to 100 unit range. So keep your head up and make it happen, right?
J-Love, thanks.
See you, Gino.
Bye, guys.